Good morning, everybody. It is the 25th of May. We are Signal Centre Talking Bull. I'm Joe, joined by Jamie and Steve, as always. Good morning, gentlemen.
Morning, Joe. Morning, Steve.
How you both doing?
Yeah,
Good. Thanks. All good.
Good. Glad to hear it. Okay, latest episode of our stream. We're live and up and running on TradingView, so welcome if you're joining us live or later. Hopefully you get some good value from our show today. So let's get into the latest headlines and what's moving markets. Starting off with the US business confidence number, the Pmi Manufacturing Index retreated to a 3-month low in the US yesterday to 57.5 for May from 59.2. That was in line with expectations. There was, however, a steeper than expected decline in the services sector index to a 4-month low of 53.5. We also saw the inflation pressures continue in the Eurozone. The PMI Manufacturing Index retreated there to an 18-month low to 54.4, which was slightly below the expectations of 54.9. Cost pressures eased slightly, although output prices increased at the second fastest rate on record. There does appear to be some splits in evidence in the ECB. The President, Christine Lagarde, stated that markets should not translate words into percentage point moves, but also commented that the bank is attentive to the level of the euro. There is a clear consensus that rates will be increased in July. In terms of what's going on in the UK, the business confidence figure slid there also, with the manufacturing index dipped to a 16-month low to 54.6 from 55.8 the previous month, which was slightly below the expectations. Most attention focused on the services sector, with a sharp retreat to a 15-month low. The rate of output prices slowed slightly amid weaker demand overall. With business expectations dipping to a 2-year low. We did see a bit of a bump in the sterling price as a result of that as well. And then overnight, we saw the Kiwi jump on hawkish Royal Bank of New Zealand rate hike. The RBNZ increased interest rates to 2% from 1.5% at the latest policy meeting, which was in line with expectations. And we did see a fair amount of New Zealand dollar strength on the back of that. So let's get stuck into some charts and have a look at the price action of various assets this morning. Steve's going to kick us off with crypto by the looks of things.
yeah. I just it's been a quiet week really in crypto. Looking at the weekly chart, we're still hanging around this major support line, 28,850. We've got it drawn in, so around about that region. Obviously, it's a band of support at the moment. And we expect this to sort of break out at some point, but it's really sort of like the momentum is slowing down to the downside, but we're still under a bit of pressure. I can see it sort of like maybe like bouncing off this when you get a big whale coming in to sort of like buy, but yeah, it hasn't really performed very well, breaking out of corrective channels to the downside again. And as you can see, we're sort of building up a bit of volume. If you're looking at this volume bar over the side, point of control comes in around about 39.5. It's quite close to the 40,000 level. So for me, while we stay below the 33,000 level, I'm just looking really to sell into any short-term rallies to sort of like maintain a short position on Bitcoin. Not that I have a position on Bitcoin, but that's what I would be doing if I was trading this. Looking at the commodities, looking at gold. Gold is trying its best to recover from this sell-off. It got up yesterday, got up to 1870, so it broke through that 1865 resistance that we had. 1870 traded, but overnight we've seen prices sell off, and again we had a band of resistance up here which it just poked its head through, and even had a little close there on the 4-hour chart at about 6 o'clock. It closed above that band of resistance, but over the next 12 hours got smacked back down again. So gold really struggling on that side of things. Next real levels to look at in gold, look at the hourly chart for this to get a little bit more clarity. Really looking at support around about this 1847 to 1850 area. Below there we should see 1832 do some sort of job, and the major support really down around about the 1800 to 1807 area. Above here, 1890 is really the next resistance after, if we can manage to get above 1870. Crude oil again has also been a little bit sideways over the last few days. We had this recovery last week. So let's get the daily chart up. And we continue in this. Oh, there's a lot of lines on there. It's looking very confusing. Let's get rid of a few of these. Oh, got rid of the one I wanted to show you. So point of control in here on crude oil coming in at 103.60. We got down to this low only about 5 days ago at 102.93. So 103 really area there. And but price action over the last few days, as you can see, has been a little bit indecisive. Doji candles being posted. I still am bullish towards this. I think this corrective channel is going to, or it could be the start of something more impulsive. As we can see, this move higher has corrected nicely, ready for maybe another breakout to the upside. Can't really see oil doing anything else at the moment. Buying dips is the more favoured option for me. Yeah, that's about it on the commodities.
Okay, cool. Well, let's take a quick look at FX then. A few movers yesterday to have a look at. Let's bring up the chart. So first of all, starting off with the dollar index, as we often do. That continues to retreat from these highs that we posted at around 105. A little bit of a rounded top formation taking place here. We've broken through the short-term uptrend and also taken out a bit of a support level here that we had on the chart. So it looks as though this is in corrective mode, and we could see a pullback for me as to as low as sort of 99.09, which would be a 38.2% pullback from this entire up move, which would just be a nice normal correction within the grand scheme of things. And I think that would be a good opportunity there for us to consolidate prices on the dollar index before potentially further moves to the upside. Obviously, the underlying trend still remains very bullish, but there is scope here for a continuation to the downside, in my opinion. If we take a look at euro US dollar on the flip side of what we've just seen on the dollar index, we can see overall the trend remains bearish, but we have seen a little bit of resilience and a bit of a correction to the upside. Maybe that's some short covering. We are approaching a 38.2% Fibonacci level here in the short term at 107.86. It's just from this recent swing move here. So from these highs down to these lows, and we're targeting these kind of fib levels as well, where potentially price could go in a corrective phase on the upside. We saw a fair amount of volatility in sterling yesterday, just really to reiterate the dollar weakness at the minute. We did see cable continue to sort of hold up okay. Obviously, still looks pretty bearish overall, but potentially forming a little bit of a rounded bottom in the very short term. I think any upside is likely to be limited, potentially as high as 1.3000, but overall, there could be room for more upside on this in the short term. But what I really wanted to focus on was on the back of the PMI data yesterday from the UK, we saw some interesting moves. So this was sterling Swiss. We've seen Swiss really come to the party a bit in recent weeks as a bit of a safe haven, which typically was owned by the dollar. But now we're seeing the Japanese yen and the Swiss franc actually turn up as well. So what was interesting about this one, we can see it's trading in a downtrend. We highlighted last week in a couple of trade ideas that we did on the gun to the head side of things that this was trading in a pretty well-defined range. But what we saw yesterday was a big break to the downside of that, severed through that support, and now we're trying to see a bit of a retest on that at the minute. So that may be an opportunity for short sellers to jump on the back of that and expect lower prices. If we take a look at sterling yen, we talked about this, and I think Jamie's also talked about it as well, being a head and shoulders top here on the daily chart. We saw the head and shoulders pattern form. We saw a decent breakdown here on the 11th of May, and then we started to see a correction into the neckline. We did a bit of a job going over the top of that neckline, but ultimately the sellers have remained in play here. So we saw a big bearish engulfing on the 18th, and we saw another bearish engulfing yesterday, which may indicate that we are going to see lower prices. Finally, if we take a look at sterling versus New Zealand dollar, on the back of the rate hike yesterday that we saw from the RBNZ, although it was probably priced in, we have seen some New Zealand dollar strength. And following this minor correction to the upside on the daily, we actually saw a break below the channel. So that may indicate we're going to see lower prices, potentially back down towards this support zone here, around 188.50. So that may be worthwhile paying attention to as well. The other ones I want to show, again, on the back of the RBNZ, we have seen a decent move to the upside in New Zealand dollar versus the US dollar. That's fast approaching a 38.2% fib level at 65.28. Interestingly, if we go further back, we can see this entire move as a result of the, well, this was throughout the pandemic, and then we saw this grind lower. We actually saw this 61.8% Fibonacci level of this entire move do a fantastic job of support. As you can see here, this red line pretty much nailed it. And since then, we've seen a decent move to the upside. So I would suggest it's probably corrective at the minute. But obviously, it's been quite a nice move for anybody that's been trying to speculate on buying into this severe weakness that we've seen. Finally, just further evidence of the Swiss franc and Japanese yen acting as safe havens. We can see here that when US dollar versus Swiss franc got to that parity level at 1, the sellers have stepped in and we've seen a pretty sharp move to the downside. We've got some clear support here on offer at 94.72, and it doesn't appear to be anything slowing that down at this stage. So it'd be interesting to see what it does in that region there. And then finally, we'll have a quick look at Dolly Yen. We've got this level marked here as intervention because that's when the Bank of Japan suggested that they would be interested in intervening. Obviously, we saw this really steep move to the upside, some severe yen weakness, but now we're actually starting to see yen strengthen up a little bit. And yesterday we saw a pretty big engulfing candle, a bearish outside day as well, and it looks as though that could be forming a short-term top, and there could be some potential downside on that in the very short term. Not much to look at on the indices, actually. We've talked on a number of occasions about the potential for a top forming on some of the US indices. So this is the Nasdaq, and this is a daily chart. So for me, we've got a big top pattern that's formed here. We're trading in a bearish channel, as we can see, but we are seeing some evidence of support. Sorry about this, on the Fibonacci levels. So the entire pandemic move to the upside, we're actually seeing prices stall at this 50% Fibonacci level, which is in yellow. And if we zoom in to see the recent days worth of price action, we can see a little bit of indecision here, a couple of hammer type candles which are starting to form. So that may indicate that buyers are trying to sort of step in a little bit here, take advantage of this weakness, and we could potentially see a bit of a correction to the upside. I do think it will only be a correction. I'm not one of those that believes we're going to see any sort of full-scale recovery anytime soon. I think there's a little bit more to come with this downside move. Typically, when downside moves end, you see a big flush out and a big capitulation, which we haven't seen as of yet. So I'm going to leave it there on the indices because there's nothing else really that stood out other than that for now. So Jamie, stocks, what's happening?
Cool. Thanks, Joe. We're going to start off with our biggest gainer and loser. And the gainer yesterday was CRMT, which is America's car mark, which was up 30%. It was in this downtrend, actually. And I'm going to test out this new tool that I've heard about before the show that I haven't been using properly. We were in this channel. Look at this. And now we've broken above the top side of that on earnings yesterday. So a really nice 30% move. Up about, what would that have been? We were trading at $80 the previous day, and we're up to almost 100. So a pretty decent move there. Snapchat, we talked about it yesterday, had to be the biggest loser of the day. Not only did it open considerably lower, it closed a lot lower than it opened as well. So it ended up being down 43% on the day. We always talk about coming into earnings or something, an important event. If we've got the weakness in the market, that can often be a foretelling what's ahead. We had this bad but bearish price action coming into what was, I think, guidance. But, you know, we had this gap down here. We had another gap down. The writing was on the wall for Snap, so down 43%. And as I mentioned, we'll quickly go into the heat map of the stock market. Here we go. Getting good. Here we go. Perfect. So yeah, you can see it's a bit of a mixed day, honestly. Some of the smaller stocks seem to have been performing okay. You can see this bottom right side of the market. There's more green, but the bigger stocks, and I think the most notable is Google and Amazon and Tesla, actually all down 5%, 3%, and almost 7%. So some pretty hefty moves down there for the bigger stocks. But yeah, a real mixed bag, as you're saying, Joe. I'll move back over to. We can take a little bit of a look at those stocks in a bit more detail. So here we go. There we are. Yeah, so Snapchat had that really bad down there, and we said that could lead other industry rivals to be moving down as well. Pinterest gapped down pretty considerably, up on some pretty big volume as well. Gapped through this previous support and closed lower on the day. That was down 23%. So a real big move down there. Upstart still struggling. I mean, this looks like it could go a fair bit low. We had this big gap down. How much are we down from the highs for Upstart? That's got to be like 90%, doesn't it? Have we looked at this before? I think we have. But we wasn't long ago on my birthday, 15th of October, $400, sorry, and we're down. We were down 93%. We're currently down only 90%. So we had a bit of a recovery, but that's pretty rough in about 8 months. I want to have a look at Roblox Day. We talked about this before as well, coming into this trendline resistance, and it seems to have held up quite nicely, gapping down yesterday and closing lower as well. So that's quite a nice. It was quite a nice one we looked at. Facebook again on the Snapchat news, gap down, formed this doji style candle, really in the middle of nowhere. This is a bit of a strange chart, honestly, because we had a gap down, we had a gap up, after another gap down, and we gapped down again. So it's a bit sporadic, it's a bit all over the place. So be careful if you're looking at that. What else have I put down here?
On that Meta Platforms, Joe, could that be something to do with dividends? Or would we have a dividends?
Dividends would be shown on the chart. I think Jamie's got them tagged.
Yeah,
so down the bottom they'd have a D. If you
that's
look
say,
at the company information for Meta Platforms, Jamie, if you can just pull that up, it doesn't actually have a dividend yield. So a lot of these tech stocks don't actually pay dividends.
Right.
And Jamie has got the ADJ ticked on his chart down the bottom. So what that does is actually adjust the chart for dividends.
Right.
So it won't create any gaps or mad changes in price. So I would recommend having that all along. So basically what that creates then is a total return chart for users rather than, having it without dividend influence in there. So if you haven't got that ticked, you may want to consider that particular. Obviously, if you're looking at stocks, it doesn't apply to anything else.
Yeah. Just the sort of like the gap down, just sort of. I suppose
it was on earnings, wasn't it?
No, sort of like even the last day.
Oh, right, okay. That's probably the Snapchat situation.
Yeah.
So obviously that's a bit of a whack to tech stocks. They're kind of in the same space in that, social media. Well, they are in the same space, social media. When a stock like that gets a 43% whack, it's going to have an influence on others because it may sort of set the bar as to what the others are expecting as well.
I mean, it shows you how linked these companies are, especially from
how fragile it is, really.
Yeah. So especially from a trading perspective. But I think that sometimes that sort of breakdown, it's Snapchat story. It's a real issue with Snapchat. It's had the impact on Facebook, so maybe it creates a bit of value in getting into Facebook if you are looking to sort of like
the story, obviously being involved in the socials. I mean, I think Facebook's a bit more of a monster in terms of generating revenue, obviously from ads and things like that. But they've all gone up ridiculously, and there was probably not really a lot under the bonnet of these rises in the first place. To be honest, there was crazy expectations put on these stocks when probably the balance sheets didn't ever match up. So it was a bubble, wasn't it? Really?
Yeah.
And that bubble's now popped.
Yeah, and still plenty of room on the downside. But if you're looking at that chart, that feels like you've had the first leg of the correction. You may have had a slight recovery on that, and potentially we're entering the second leg of the correction, which still has a big long way to play out.
Well, I
You're
was
looking
looking
at
at
that
this
100.
on the Snapchat chart and the video I did yesterday. You try and point out the pandemic on that chart and just how irrelevant it looks now.
Yeah,
And then it was a big deal. It was a massive drop in the market, but
it was huge, wasn't it? It was
yeah,
like for a couple of weeks, it was like limit down, limit down, limit down,
yeah.
and you're sort of like,
That's a
it looks
60% dump
insignificant.
in Snapchat, but it looks so insignificant. And then obviously you've seen that massive rally up, which was fueled on what? I know we were
Yeah,
sitting at home, and then you
using the
see a
products.
950% rise.
Mm. Yeah, amazing. It's just, yeah, like you say, it shows you what a vacuum that created. That sort of like rally up was on pretty sort of like lowish volume.
Yeah, it was
But it was just
a
everything getting
speculative
carried
bubble.
away.
And the problem is, as you said, about the fragility of it all, people that were buying stocks probably would have had a portfolio of, a good few tech stocks, and now they're all getting hit at the same time. So
Yeah,
it really stresses the importance of diversification when you're investing, and not just being involved in, everything tech. You need to be
yeah,
looking at, some more stable stuff in there just to, help if things do turn in the way that they have. And it's been so, well, you say quick. I mean, that's a weekly chart. The signs have been there, but I'm sure there's a lot of people that are still holding it, thinking it's going to come back.
yeah. Absolutely. Mm. Yeah, thanks for that.
Sorry, Jamie, we properly hijacked your analysis there. You're on
Oh,
mute.
you're
We've
muted.
muted him as well.
Stunned me to silence. No, interesting points. I think, like you said, a lot of these stocks do have a lot more room for downside, which seems strange after an 80% drop in something like Snapchat. But there certainly right now is no technical sign of anything bullish at all.
One thing that I saw on that, because I did this stream on it yesterday. If you go on the
Hmm.
daily, there is actually an unfilled gap from a long time ago. If you scroll back to the left, there. So you'd go by the close on the day prior to the gap. That would be, I think it was around, so the close of that day there. I don't know if you're going to put a horizontal line on it, but that's potentially support. I'm not advocating buying it by any means, but if anybody did want to have a look, then there is potentially support there.
Yeah, I mean, we're pretty much there, honestly. We're like 30p off now, but that does line up with this previous support level, and obviously it's an area of interest.
There's another gap down at
even lower.
680. You might want to sort of.
I might consider buying that one actually.
Dip your toe in there, maybe.
Yeah, that's still a fair way off that. I mean, honestly, at this stage, I wouldn't be completely shocked if we did get down at least the pandemic lows on something like Snapchat, which is really struggling. But yeah, no, thanks for your input. It's interesting stuff. Quick look at Tesla. We saw on the heat map that this had a bad day yesterday, and we can see it really pushed through the 50% fib we have marked out. So it just continues to tumble lower, and this is another one. You could do this pretty much any stock, it seems, these days, but from the highs down almost 50%, 49%, which has happened really, really, I don't know, it feels like it's happened quickly. I remember when, not long ago, we were looking at ideas to get longer Tesla at these support levels around here, and I think we had some success kind of putting out some swing trade ideas. But now this looks very sick, doesn't it? I mean, ever since kind of middle of April, there's been no real rally that's held any significance in it. There's no bottoming signs yet. So Tesla looking lower. I think probably this support level's next stop for Tesla. So that's about kind of between 550, 560. Alibaba wants to take a quick look at, because on the intraday chart, we have this nice descending triangle type pattern. I know that's quite a popular one for people out there. They like Alibaba. When I say like, it's difficult to like this. I mean, it's gap central. I don't know if maybe we'll see something if we go back a bit further that we like. Not really. Maybe this is the next real. We kind of got some support at 75-ish, this area, and then the next one's down at 60. So that could be an interesting one to look for a break of this descending triangle. I'll fly through a couple more. Disney, I think, had a similar kind of, so we've got this as well, this support level here on Disney. This is 1 hour chart. Switching to a 4-hour, you can see we've been in this long-term downtrend. First real bit of support, but I wouldn't be inclined to love this right now. It is also at the $100 level, so a psychological level. People think, well, 100's a great number. That's got to be a good place to buy. And in the past, it has held up, but in the past, we haven't had this severe decline. We did for COVID, but it broke right through that. So, yeah, an important note for Disney. We'll see if it can do some work. I want to take a quick look at ITV. We drew up this resistance line, actually, I think a couple of weeks ago, and it hit it pretty well again earlier this week. Was that late last week? 23rd, early this week. And is heading back to that support level, about 66. And our good friend Renner, which we had a real stressful time putting out an idea for, that kept on not hitting profit, but this is in a bit of a consolidation channel right here. As you can see, we're at the top side of that channel now. I'd still be perhaps inclined for a move lower after this big sell-off we had. So potentially not a bad place. Not a bad place to look to get short here for some good risk reward. We'll finish off with a couple of the good level stocks I look at. This is a couple of things here. So we've got a bit of a head and shoulders, which I'll quickly draw out. It's not. There we go. Up to the head. It's a bit of a weird one. And then we had a break, and then this kind of taken out of any weak shorts to try to sell that break. And then we've moved lower. The other thing I saw on this stock was we do have this is a weekly chart, bit of a double top type pattern, which the target would be right back into these lows back from 2020. Last but not least, Esquire. Is this called Esquire? I'm going to call it Esquire. ESQ. Sounds like it could be the end of that. In this ascending triangle formation, we'll look at that on the daily. Had a bit of a false breakout here. Found support again at this upward trending support line, and we're back at that resistance now. So I'd certainly be biased for a break of support. What we have back here on this false breakout, we didn't have that convincing candle for me. We had this candle which kind of broke out pretty good volume, but the next day we had this doji on even better volume, which shows to me the sellers were really trying to kick in and defend that. And then after this candle as well, very bearish looking candle, it looked like that might end how it did, but perhaps just a bit of a shakeout, and we'll now see how this goes. I like I say, I'm probably biased for a break to the upside, but we will call it a day on the stocks there.
Cool, thank you, Jamie. Okay, so this is the stage in the video where we're going to give anyone that's watching 3 new trade ideas. Now, just to reiterate what it is that we do here. So this is the gun to the head challenge. So each of us come up with a trade idea live on the video. We don't really put too much thought into this. We are just trying to spot technical patterns on a quick basis and where we think we could potentially see some value today. Each of the ideas that we come up with will have a stop and a target. Exit strategy is always vitally important when trading, so we make sure we've got that in place. These ideas are placed at market and they will expire at 9 p.m. UK time, or when the stop or the target is hit. So if you do want to replicate these ideas, please bear that in mind. We will cut these trades off later today. Now, these ideas will also be published to our TradingView profile. You'll be able to find them in the ideas section. So yesterday we can see that Steve went short of the Nasdaq, and we can play that out to see how it went. And it went very well initially for Steve. He got very close to the target, as you can see there, but it did rally back into the close. So Steve was slightly onside by 0.08R on yesterday's close. If we take a look at Jamie's idea, he was buying Euro Oz on the back of the breakout from this level here, and he was slightly offside at 9 o'clock. It has then since gone on to hit the stop. So obviously if you'd followed the idea, you'd have been taking a small loss rather than being stopped out. And then my idea was a long on Aussie dollar, trading in a bullish channel, but sadly it didn't follow through. I got stopped out just by a couple of ticks there, but that's the game, sadly. Also, just to say we've got lots of streams on here as well. So not just the morning videos. We did one on yesterday on the Nasdaq and Snapchat. Steve did one on gold where he talked about alternative data as well as technical analysis. And Jamie looked at Rolls-Royce, taking a look at the fundamentals and the technicals on those. So gents, 3 ideas today. Who wants to step up first and tell us what they're looking at?
I don't mind going through my trade idea first, if that's okay. As people can look at, they can look at my gold analysis that I did. It's a bit more in depth, but yeah, I'm going to first of all talk about the dollar. So the dollar really is a big driver of gold. So if I look at the dollar index, we can see over the last couple of weeks we had this bearish engulfing and further follow through to the downside. So dollar not really is falling out of favor a little bit. So this does translate into the reason that gold is holding on and quite steady. Now there is the levels I've sort of picked out over the sort of like the show this morning. I'm really sort of like focusing on the really sort of like my overall view is got further gold weakness, but because dollar is actually weakening, this has led to the rally, and it gives gold a little bit more potential upside before the sell-off comes. The next level of resistance I have is around 1890. You can see that'll be part of this higher volume area up here, resistance coming in there at 1892. So the other formation that I'm looking at as well with gold is this inverse head and shoulders formation, which looks pretty cool so far. Potentially like that. We did sort of like trade around the neckline. We have come back this morning. Is this the opportunity to get long? You can sort of maybe look at the hourly chart and see what the price action has been like. So I'm tempted to actually go long of this for a short-term upside play. So let's get my time frame right. This will expire at 9 o'clock. I'm going to really look for a little bit of further upside on the day, and could really take it up here. And if I'm looking for that sort of upside, I could maybe have, well, in my eyes, as a sort of $10 stop in gold isn't a bad sort of like, it gives it a bit of room, and it also takes it below this previous swing low. So if we do get back to these levels, I wouldn't want to be holding it because there's a big threat of a breakdown there. So that's my trade idea. I'm looking to buy gold here at 1858, 74. The target is 18. I can actually target a little bit more of a move higher. Squeeze a little bit more reward out of there. I'll go for a 3-to-1 risk reward. My target is 1888.74 and my stop is 1848.74. That's my trade of the day. I'll publish that now.
Cool. Jamie, do you want to go next?
Yes, I can go next. So I actually looked at trading copper last week or the week before, and got stopped out or it didn't work or whatever it was. But I looked at it again, and what I'm seeing here is from the move down we've had here, we've had a 78.6 fib, which copper has smacked right into. This has also formed a bit of a short-term head and shoulders top formation here, which looks to have been broken through, although it is starting to move back up, which is a little bit scary, but I can get some better risk reward. There we go. Love to see that. I've also on the left here got the volume profile. The points control for this move up here is down at this level. I think I'm going to be targeting that. So let's move this down here. So we're going to target that. That gives us quite a nice for our move. So to summarize, we are going to be selling copper at 4.276. Our take profit is going to be at 4.175. And our stop loss will be at 4.3010, which gives us a 4.04 risk reward move. Looking to short copper today.
Superb. Good luck, mate. Okay. I'm looking at sterling Swiss. So I've got it ready to go here on TradingView, but just talk through this very quickly. So highlighted a big range here on sterling Swiss. This is a 4-hour chart. Yesterday on the back of the PMI number, we saw a big break through this range, and now what we're seeing is a retest of that on the underside. So that presents a good opportunity to get short, in my opinion. Now, when you're looking at ranges, you can also use sort of measured move tools in order to predict where the price should go on the downside. So what I've done here is taken a measurement from the high of the range down to the low and projected it lower, and that comes in at 117.06. Now selling into here with a tight stop above the range, so it's going to have to break through the range again in order to stop me out. I've got a 40 tick stop, but the target is down here, which is giving me a risk reward of 9.29. So pretty massive stuff. Now I don't expect it's going to get there today, because that would obviously mean an absolutely enormous move, but who am I to rule that out? Things can change throughout the trading day. News can come out. So I want to put myself in a position where that is possible. So let's just go through the trade idea itself. I'm looking to sell at 120.78. And we've got a, in fact, it's 120.72 it is at the moment. So I don't want to be accused of nicking 6 ticks there. The profit level is 117.07. And the stop loss is at 121.18. So the risk reward is around 9-1 on that today. So looking for a humdinger on that. That's going to be published right now. Let's change that to 72 as we discussed. And I'll adjust the risk reward in a moment, but that will be published to our TradingView account momentarily. Okay, hopefully that was useful. Now we can move on to what we can expect from the day ahead and what's likely to move markets today. And the most important thing that's out is the Federal Reserve minutes. Now that's out 7 o'clock UK time. So obviously a lot of us based in Europe will probably not be focusing on charts because you'll be spending time with families, etc. But do be aware that that is happening later, and it can be a big market moving event. He's likely to discuss monetary policy and also what they'll be doing with interest rates in the US. I think a lot of it's already priced in. We are expecting rate hikes over the next couple of months. But we'll obviously be waiting to see what he has to say and what's in the minutes.
That could add a bit of volatility to our intraday trade ideas, couldn't it?
Certainly could. We'll have another
Especially
couple of
gold.
hours left to run. Yeah, absolutely. Cool. Right. I think that's it, gents. We are running close to 40 minutes, so let's call that a day, and we'll be back tomorrow.
Lovely.
Cool. Good stuff, guys.
Have a great day, everyone. Bye-bye.
Cheers.